Good morning, good afternoon, good evening from whichever side of the world that you're joining me from. My name is Ian Joseph, lead market analyst. A quick disclaimer is this information is only meant for educational purposes. None of this should be construed as investment advice. Trading the financial markets do carry a degree of risk, and I'm willing to take you through the right process of understanding the financial markets. Now, starting off today with Asian session. If I can just go to my economic calendar, remember one of the first things you need to do as a trader when you wake up is look at what is happening currently in the world. Starting off with Asian session, looking at my economic calendar, we did have the Reserve Bank of New Zealand lowering their interest rates today. Let me look at my filters. I do believe I need to have Reserve Bank of NZE, which did lower their interest rates by 25 basis points, which was quite interesting. Looking at price action, and which will go into the charts in just a moment's time. Let me have my filters. I need to have New Zealand here. It's supposed to show. Okay, jolly good. Here we are, whereby we did have Reserve Bank of New Zealand lowering the interest rates by 25 basis points from 3.25% to 3%. And this was very interesting. And we shall look at price action. What happened during this period in time? Remember, the news did come out at exactly 5 p.m. Nairobi time, and we had high impact news release. We had 3 of them, actually 4 to be exact. And the speech was what usually creates the volatility in the financial markets, because investors want to listen to the chairs. Why did you take the move that you have just taken? Why did you lower interest rates? And if you can go into the charts, look at New Zealand dollar against the United States dollar. This is on the 5-minute time frame. You can see that the New Zealand dollar did lose against the dollar from 5 p.m. This was the candlestick here exactly. Look at this massive candlestick. This was as a result of the news release, whereby the New Zealand dollar did lose almost 1.15% against the United States dollar. Now, interest rates are very important. They're very important tools that central banks use to maintain an economy, whereas the 2 main mandates of a central bank is to create employment and ensure that inflation is below 2%. Okay. Now, when these 2 main criteria are hit, this is whereby the central bank will be prompted to lower interest rates. Now, this is very important because as a result of this decision, you can see the New Zealand dollar the higher time frame, and we're having a discussion. Why are the markets selling currently at the moment? In yesterday's live, we did talk about these 2 key regions that we were looking at as traders. And remember, the most important thing as a trader, you react to prices. We did have consolidation, and this is very normal, whereas the market is anticipating for major news releases, especially high impact news releases like what we were anticipating today in terms of the interest rates. You usually do anticipate the markets to enter a period of consolidation. As you can see, this consolidation did last for almost 5 days, 1 hour, whereby the markets did break this zone that we were looking at yesterday, closed below, and when the data did come out today, the trend did continue moving to the downside. Remember, the markets do usually move in 3 phases, whereby we had this impulse. This was a complete correction on its own, and then we had another impulse. Now, looking at price action where it is currently at the moment, candlesticks are printing side by side, meaning whenever the market does make a huge impulse, we usually do anticipate a correction coming forward. Now, this is very important because this is the result of the Reserve Bank of New Zealand, which did lower the interest rates. Now, interest rates, when an central bank does lower their interest rates, basically what they're trying to do is encourage borrowing and discourage investing. Technically, this is how it happens. High interest rates make it more attractive to capital inflows, okay? Meaning bonds, government issued bonds are going to be very attractive. So when a central bank does lower their interest rates, basically they are making borrowing to be much more cheaper, but at the same time they are discouraging investing, meaning the bonds are going to be much less attractive, and you see money moving out of a country. If you look at historical data, what happened last year between the Japan in the Bank of Japan, whereby the Bank of Japan did increase their interest rates from negative to positive, we did see the unwinding of the carry trade, meaning all of a sudden the Japanese yen became much more attractive to investors and money moved into the Japanese economy, whereby we did see Japanese yen gaining quite aggressively against the United States dollar. And if I can just go to my chart here, historical data on the daily time frame, we did see the United States dollar lose against the Japanese yen. I do believe it was around this region here. One of the two price actions here. This was the exact price action. This was when there was unwinding of the carry trade as a result of the Japanese yen, Bank of Japan to be exact, whereby they did increase rates from negative to positive, and all of a sudden the Japanese yen became stronger and money moved into that specific economy, whereby the United States dollar did lose against the Japanese yen. Looking at the Nikkei did also have something similar, whereby now with equities it's very, very interesting, whereby remember, these are companies. When you're looking at the Nikkei, this is the top 225 companies in Japan. And whenever they have a weaker currency, it means that it's going to eat into their profits. So interest rates are very crucial for us traders to be looking at, because it shows us where the economy is headed to. Remember, we are dealing with currencies, and currencies are fiat paper. Usually it's more of buying and selling power. So if a currency is going to be stronger, it means it's going to attract more investors. But if the currency is weaker, it means that money is going to flow out of that specific economy. Now, whenever you're looking at a currencies, there are two main people that we want to look at. We want to look at the consumers and we want to look at the investors, okay? Let's say, for example, we did have the British pound today releasing their CPI data. Now, this was the Reserve Bank of New Zealand, and today in the evening, we are going to have a speech from one of the members of the New Zealand Reserve Bank of New Zealand, who's going to have a speech on why did they take the decision that they did take. And as you can see here, usually after the release, especially when they cut interest rates, there is usually a speech. As you can see, this is the press conference here. And if you go to the YouTube, you're going to see this speech as it was happening live. There is usually the question and answer, and this usually sparks a lot of volatility, whereby investors want to see why did you take the decision that you did take, and what could be up ahead for the financial markets. Because once again, the biggest participants of the forex market are the central banks, and everyone pays attention to the central bank, because if they do say that they're going to raise or lower interest rates, it means it's going to affect the market in the long run. Now, before we leave New Zealand dollar, I would want us to look at the commitment of traders report we did yesterday, but I just want us to look at it once again, looking at how this information could be crucial for us. Now, remember, you want to go to the financials and then Control F. I want to look at the New Zealand dollar. This is the New Zealand dollar. Remember, once again, you want to focus on the asset managers and institutions, okay? Now, looking at the data from August 5th, 2025 till August 12th, 2025, we did see institutions offload 139 net long positions, and we did see them add 1,729 net short positions, meaning institutions started selling the New Zealand dollar as early as August 5th of August to be exact, okay? Now, looking at the chart from August 5th, the markets has been trending to the downside. Now, this coming Friday, I would also want to look at the commitment of traders, ask myself, what does the data mean in terms of long-term projection? Remember, the trend is your friend. Looking at price action currently at the moment, the markets are making lower lows, lower highs, lower lows, lower highs. We have just broken the most recent lower low that was formed back on 1st of August. Now, remember, this was when NFP was released. We are looking at New Zealand dollar against the United States dollar, whereby we did see the markets break the most recent low at around 0.58621, and this candlestick is currently trading below this region. Now, for us traders, remember, we react to prices. What could be the next possible scenario that could happen in the financial markets? If you do get a region of support forming around this region here, we might anticipate a short-term retracement, prices moving to fill in inefficiencies for a further continuation, either to the downside or to the upper side. But a more likely scenario will be a breakout and retrace of 0.58621. But at the same time, remember, the markets could continue moving to the downside if at all. The speech from the Reserve Bank of New Zealand today does show that there could be more interest rate cuts in the near future. Once again, for us traders, we do react to prices. Sorry about that. Just a moment. That is going to be it for the New Zealand dollar. I would want us to switch gears to British pound, whereby we have just received CPI data a few moments ago, 1 hour, 12 minutes to be exact, whereby we did see inflation numbers actually come out better than anticipated on the year-on-year release for July numbers. Now, remember, we were looking at a previous number of 3.6. The anticipation was the CPI numbers was going to come out at 3.7. The data actually came out positive at 3.8%, meaning consumers are moving money in the British economy. This is very important, especially coming from last week, whereby the data did come out mixed reaction in relation to the British pound. Now, the CPI is one of the most important news releases in terms of measuring inflation. Remember, consumers do account for a majority of overall economic activity. So meaning if this data does come out positive, it means that the economy is doing better in terms of people are buying and selling currently in the markets. Now, when the data usually does come out, investors look at this piece of information, asks themselves, the rate at which the prices of goods and services are bought by households rise or fall. Now, this is produced to international standard. It is the inflation measure used by the government's target. The year-on-year reading compares prices in reference month to a year earlier. Generally, a high reading is seen as bullish for the British pound, while a low reading is seen as bearish. Sorry about that. Now, once again, looking at the CPI numbers, and we want to switch to the charts looking at what this information does seem for us. Now, remember, once again, the purpose of a central bank is to maintain full employment and ensure inflation is below the 2%. So currently at the moment, inflation in the British pound is at 3.7%, looking at the year-on-year release. Now I want us to switch over to the charts, looking at a chart of British pound against the United States dollar. Remember, this is the 4-hour time frame, but I want to switch down to a 1-hour time frame. Look at this information and ask ourselves, what could this mean? Specifically during the news release, whereby this was a particular candlestick whereby the CPI data was released into the financial markets. Now, looking at it currently at the moment, this is on the 30-minute time frame. We did see buyers coming into the market ever since towards the end of Asian session close. That was around 5:30 a.m. today in the morning. The markets started pushing to the upper side. When the data was released, the markets digested this data as positively, and we did have this massive candlestick, which did gain almost how many percent of the total value? This was almost 0.2% in just one candlestick of trading as a result of the data coming in positive for the British pound. Looking at future projections, remember, the trend is your friend. And how do you identify the trend? You usually start on a higher time frame, moving down to a lower time frame. And looking at it currently, we are in an uptrend, a strong uptrend of the British pound against the United States dollar. But we have a very interesting region of support around 1.31626, and we want to see it did hold previously. Now this was once again during NFP numbers, whereby the NFP number did come out negative for the dollar, whereby we did see the British pound gaining against the USD. But currently at the moment, we are in a region of resistance, and we will want to see how this candlestick is going to respect this particular region. Looking at how prices, now prices, whenever it's we do have regions, we have zones of interest, prices will be attracted to those regions. Remember, prices moves from zones to zones. Look at how we did have massive candlesticks moving to the upper side, but we did hit a region of resistance, and now the markets are currently rejecting that period. Now the data has come out positive for the British pound against the dollar. Could we see this resistance being broken? If we do get a candlestick that closes above this region, then this could signify that the trend will continue further to the upper side, whereby we will see prices of British pound moving and attacking these highs that was formed back on 1st of July 2025. But on the other hand, if we do get a candlestick that closes below this region, and then we do have data that is going to weaken the British pound while strengthening the US dollar at the same time, then we might anticipate prices of the British pound continuing with this most recent direction that we have to the downside, whereby look at the previous candlesticks. Remember, this is on the daily time frame. We do have resistance forming around this region. Now, this most recent structure broke the most recent lower lows. Now, this could be signified as a change of character because these highs failed to break the most recent highs, and we are currently respecting these same equal highs, meaning if we do have more selling pressure on the British pound against the United States dollar, we might anticipate prices moving further to the downside. And if you look at it from a pip perspective, this is quite a good range, almost 334 pip range to the downside, to the most recent region of support that we do have below this region. Now this could be very interesting. Remember, once again, as traders, we do react to prices, we don't push prices. And as a trader, you will want to look at these probabilities, ask yourself, how can I make money as a result of the probabilities that I'm looking at? Currently ongoing at the moment, we do have President Lagarde's speech. Now, she's the head of the central bank, the European Central Bank to be exact, and her speech is very important to us traders because investors look at where the European bank, the Central Bank of Europe, are going to set their interest rates in the near future. Now, her name is Christine Lagarde. She was born in 1956, one of the most beautiful ladies that I've ever seen. Formerly served as managing director of the International Monetary Fund and Minister of Finance in France. She began an 8-year term at the helm of the ECB in November 2019. As part of a job in the Governing Council, Lagarde holds press conferences in detailing how the ECB observes the current and future state of the European economy. Her comments may positively or negatively affect the euro's trend in the short term. Usually a hawkish outlook, meaning whereby we'll see high interest rates, will boost the euro, while a dovish tone weighs on the common currency bearish. If you could go over to your YouTube currently at the moment and just input ECB President Lagarde, she is going to be speaking currently at the moment, and investors usually digest her tone. The most important thing here is the tone, because remember, once again, she is the head of the central bank. Now, if they do decide to lower or raise interest rates, the markets are going to digest that information, and investors will want to position themselves in the long-term perspective of the market. Later on today, we do anticipate FOMC minutes report. Now, this is the minutes of the most recent meeting that the FOMC did have. Now, it's going to come out at exactly 2100 hours, which is going to be 10 hours, 40 minutes from now. Now, this is just the minutes, okay? This is not the meeting itself. The meeting already happened. Now, this is the minutes. Now, the Federal Open Market Committee do 8 times a year and reviews economic and financial conditions, determines the appropriate stance of monetary policy, and assesses the risks to its long-term goals of price stability and sustainable economic growth. The FOMC minutes are released by the Board of Governors at the Federal Reserve and are a clear guide into the future of United States interest rate policy. Investors, as traders, you will want to look at these minutes and ask ourselves, is it likely that we might see an interest rate cut in the near future, or the Fed will hold their interest rate cuts in the near future? Now, once again, if I can go to the CME Fed Watch tool, it's going to be in 29 days, whereby we do 28 days actually, sorry about that, 28 days, 10 hours to go, whereby we are going to receive the interest rate, and these percentages usually change. I do remember from yesterday's live stream to today, the percentages usually change depending on the tone as investors look at the probabilities of interest rate cuts in the near future. Currently, at the moment, we do have it at 82.9% chance that we might receive interest rate cuts in between the 400 and 425 basis points, whereas there's only a 17.1% chance that we might see interest rates being held at 425 and 450 basis points. Once again, this is very important, as we have seen from the New Zealand dollar today, whereby they did lower the interest rates and the markets did tank to the downside, meaning the same could be said when the time is near for the Fed Reserve to lower interest rates. We might anticipate a bit of volatility in the financial markets also as a result. Now, going to the commitment of traders, I want us to look at the British pound. Look at what institutions have been doing for the past. Now, looking at GBP, remember, once again, you want to focus on the asset managers and institutions. Looking at it currently at the moment, we do have only 43,681 net long positions and almost 115,651 net short positions, meaning institutions are favoring selling the British pound in the long run. Okay, I want to repeat that. When you're looking at net positions, this means the general direction, the overall trend of the markets, but this is for big institutions. For us traders, for intraday traders, for day traders, for swing traders, you will want to focus on the changes. We can see from August the 5th till August 12th, we did see institutions add almost 11,377 net long positions, while at the same time they just added almost 22 net short positions. Now, what this means is, in the short-term direction, institutions are adding more long positions on the British pound. Now, if you look at the chart, this could signify buying opportunities. If you look at it from 5th of August, which was around this region, from 5th of August till 12th of August, somewhere around this region, institutions were adding more long positions, and we did see prices of the British pound gain against the United States dollar. Now, whenever institutions are buying, when they start offloading positions, you do anticipate a short-term retracement. Now, this coming Friday, I would want to look at the commitment of traders again, once again, and look at how institutions did position themselves, especially after the data did come out today in terms of the CPI numbers, which came out better than anticipated, showing that consumers are in the right direction in terms of spending in the British economy. Now, once again, this is going to be very decisive, especially looking at the British pound against the United States dollar. The Jackson Hole Symposium is about to start tomorrow. If I can just pull up my filter here. So it is a 3-day event. Once again, the Jackson Hole Symposium is a 3-day event whereby leaders of the central bank are going to meet up at the Jackson Hole, and then they are going to discuss about where, okay, here it is. It's going to be a 24-hour symposium. It's going to be 3 days, okay? It did start in 1981. It is a forum for central bankers, policy experts, and academics to come together to focus on a topic. Now, in this particular case, we shall be focusing on the interest rates. Remember, once again, the biggest participant of the forex market is the central banks. And if they are going to have a meeting, especially if it's going to be 3 days long, we will want to sit down and listen to them. What do they think about the economy currently at the moment? Where do they think that the economy is generally headed to in the near future, especially looking at in the next 28 days, we do anticipate the Fed Reserve to have their sit down. We would want to see, are they going to lower interest rates? Remember, if they do lower interest rates, they are encouraging spending, but at the same time, it does weaken the bond market. Bonds will be lesser attractive to investors, meaning there's a high probability money will move outside of the economy. But on the other hand, if they do hold interest rates where they are currently at the moment, it means that they are attracting capital inflow into the economy. So this is some of the things that we traders would want to look at. And looking at the British pound, the commitment of traders, once again, let's look at the United States dollar, especially looking at the financials, the United States dollar. So we do have a few. You can start with the treasuries, the 10-year treasuries, looking at asset managers and institutions. Currently, we have been seeing offloading of treasuries, especially in the long-term treasuries, and we are going to go into that in the charts in just a moment. Whereby the 10-year treasuries have been taking a beating. This is 10-year treasuries. Looking at it on the daily time frame, we have been seeing it being offloaded, whereby treasuries have been less attractive. This is the result of lower interest rates. Now, whenever interest rates are higher, treasuries are going to be much more attractive, and we shall see money moving into the economy. But on the other hand, if there are talks of lowering interest rates, treasuries and bonds are going to be less attractive, and we do anticipate this trend moving further to the downside. Now, we want to look at the precious commodity gold, whereby we are still in a very interesting chart pattern currently at the moment, this descending triangle, whereby prices could break out either to the upper side or to the lower side. And remember, as a trader, the main goal is to react to prices. If you do have a breakout of structure to the upper side, this means that there is a high likelihood we might continue moving further to the upper side, possibly taking out the most recent all-time high, nearly at $3,500 an ounce on gold. But looking at it on the daily time frame, prices need a catalyst for either prices to move to the upper side or to the lower side. Currently, we are on the third touch, and we will want to focus on this specific region currently at the moment. Looking at it on the daily perspective, the daily candlestick still is bullish, but we have more than 13 hours 32 minutes to go for trading. And looking at yesterday's candlestick, it did close without any wick to the bottom side, meaning could there be selling pressure? Could the bears be holding prices longer to the downside in the near future? Only one way to find out. But if I can go to the 1 hour time frame, looking at price action currently at the moment. Now, yesterday we did close below the 50% region on the Fibonacci, meaning this one is going to be invalidated, and we will want to look at the next region the prices could come back to. Now, looking at it still on the Fibonacci, we are going back to a discount, whereby prices is moving further to the downside, possibly coming back into these regions of inefficiencies that we do have residing around. Now, remember, this was the candlestick for NFP news release earlier on this month. This was 1st of August, whereby prices was at $3,298 an ounce, and the data did come out negative for the United States dollar, meaning gold did push to the upper side. But currently we are retracing, we are going back into that region of inefficiencies, and we'll want to see how prices are going to hold on to these zones here. If you do get support forming around this region, this is a further confluence of the third touch that we are anticipating on the trend line for prices maybe to come back to the upper side, possibly staying along this channel for quite some time as we anticipate the Federal Reserve decision to lower interest rates, meaning there's an 80% chance. It is not certain. Remember, it's a probability. Whenever you're looking at these charts, it's always about probabilities. Remember, there is an 82.9% chance that we might see the first 25 basis points this year on the Federal Reserve, but do not hold out the chance or the probability that there is also a 17.1% chance that we might see interest rates being held at 400, between 425 to 450 basis points. All of these will be subject to change, and that's why we do have these morning market calls, whereby we look at the most recent, ask ourselves, could the markets be buying or selling in the near future? Now, looking at silver, silver did break below our region of support, meaning our support could come and turn into resistance, especially if we had a retracement back to the upper side around $8 an ounce. for a further continuation to the downside. Now, this most recent candlestick did break structure and closed below the most recent lows that we had around $37.6 an ounce, meaning could the trend start changing whatever was happening to the downside? Remember, prices are fractal. It goes up and it goes down. We were in an uptrend whereby prices was making higher highs, higher lows, higher highs, higher lows, higher highs. But this most recent structure broke the most recent region of support, closed below. The important keyword here is closing below this structure, and we might anticipate prices continuing further to the downside as time goes by. Remember, once again, for us traders, our main goal is to react to price action, and we would want to see, looking at how the candlesticks are printing currently at the moment, we would want to wait for much better entries to capitalize if prices will continue moving further to the downside. Looking at the dollar index, the dollar index has been gaining for the past trading sessions. Looking at it from these lows to these highs for the past 60 days, 17 hours, the dollar index has gained almost 0.8% of its total value, making new higher highs, higher lows, while the lows are respecting the most recent lows, meaning could this trend continue further to the upper side if the data is going to be positive for the United States dollar. But on the other hand, if we do get data that is going to be negative, it does mean that we might anticipate prices continuing to break to the downside. Now, we do have this most recent region of support that is still holding around the 97.5 region, and we'll want to see how prices are going to be reacting as time goes by in the market section. Now, the volatility index has jumped again almost. This is the second time this week the volatility index has jumped. Remember, the first time was Monday, whereby the volatility index jumped almost 4%, and this was a result of the data that we were anticipating this week, and especially the meeting between Trump and Zelensky. We did anticipate volatility to be in the financial markets. Now, today, once again, the markets has jumped up almost 2.25% on the volatility index, and we are currently trading above the highs that was formed on August 18. Now, the volatility index, basically, this is the fear and greed index. Whenever volatility is anticipated, whenever there is uncertainties in the financial markets, the volatility index usually peaks, and this is usually reflected in price action. If you can look at a chart of New Zealand dollar against United States dollar, we did see quite the activity during Asian session, and this could be the result of the fear index picking up, trading currently at above 15.93, and we would want to monitor the volatility index. If it does continue moving to the upper side, we do anticipate more volatility in the financial markets. Looking at indices, starting off with the United States 500, which is basically the S&P 500. Once again, this was yesterday's analysis, meaning this one is going to be invalidated, whereby we did have a break to the downside. We are currently retracing, and we'll want to look at more opportunities that will currently favor us in the long direction. We do have regions of inefficiencies. This was 12th of August, whereby prices did make this massive to the upper side. We do have an order block around this region, and this is why I do believe I marked this zone around 6,379 region, and we'll want to see how prices are going to react to the next region of importance for us. Remember, once again, markets usually moves from regions of liquidity to regions of liquidity. Support and resistance could be the best thing in the financial markets, understanding how prices moves from zones to zones. Looking at the Nasdaq, remember I did mention the Nasdaq, the United States, the S&P 500 and the Dow Jones usually move in tandem. Once again, we did break to the downside, and this was yesterday during New York session, to be exact, whereby we did have this massive candlestick break to the downside. It did close below this region of support that we were anticipating, and could the markets continue with this trajectory? If I can pull a Fibonacci from this high to this low, this is the most recent high that I'm looking at. This is the 50% region corresponds to these lows that we were looking at yesterday, and we will want to see how prices will react once it reaches this point. Currently at the moment we are seeing a short-term retracement. Could this move be a short-term retracement for prices to continue moving in the overall direction of the trend that we are looking at currently at the market? Now remember, for equities, lower interest rates usually mean it's good, because companies, especially if you're looking at the Nasdaq, companies are going to get access to much cheaper loans, which means that they are going to have more profits generated as a result. Now, the US 30 is currently consolidating, and we would want to see if we still break. Now, remember, for the Nasdaq, we have closed below the region. For the United States, for the Dow Jones Index, we want to see how prices are going to react to this region of importance that we have highlighted around the 44,900 region. Looking at the Russell 2000, the Russell 2000 has been making new lower lows on the 1 hour time frame, and also once again we will want to say we are in a region of importance. If I can pull a Fibonacci from this low to this high, we are currently trading below the 50% region, meaning prices could be moving further to the downside if this move does persist, possibly coming back to these regions of inefficiencies. If I can highlight this order block around this region here, maybe we might see prices coming back down to this region, and then we will want to see how prices are going to react. Remember, once again, as a trader, you want to identify zones that you would want to be focusing on as a trader. Looking at it on a range, this is almost 2% of the Russell value, which is quite good whenever you're looking at the financial markets. Looking at the FTSE has been very silent. We have been consolidating, but looking at the CPI numbers that has just come out recently, we might anticipate a bit of volatility. Looking at where we are currently at the moment, the market has been consolidating quite some time for the past few trading hours, which is good for a trader, meaning that you might anticipate a breakout either to the upper side or to the lower side. As you can see, prices has been consolidating for the past 1 day, 1 hour, and you'll want to see if prices do break to the upper side, or once again, there is always that possibility if prices do break to the lower side on the 1 hour time frame, possibly coming to these regions that we do have of support residing below. If I can just highlight it, around 9,135. But if we do break to the upper side, the most recent region the prices could be gravitating to could be 9,230. Looking at black gold has been very interesting. We are still waiting for what Mr. Donald J. Trump, Zelensky, and Putin have come into a conclusion. Remember, at this particular moment in time, nothing yet is certain, and we have seen prices of oil consolidating for the past 13 days, 12 hours, as this precious commodity is waiting on a breakthrough of if there's going to be a ceasefire in Ukraine. This means that the sanctions against Russia could be lifted, and oil and other products could start moving into the into the Eurozone freely, compared to what we have against Russia right now are sanctioned, meaning whatever resources that they do have, and whenever it's a very big geographical region, they do have a lot of resources, and they do have a lot of sanctions currently at the moment against them. Now, if the sanctions will be lifted, this is going to affect supply and demand, meaning we might anticipate prices of oil moving further to the downside. Currently, we are trading above $66 a barrel. Now, for new wells to be dug, oil has to be trading above $60 a barrel, okay? But for oil to be sold profitably, it needs to be trading above $30 a barrel. Now, oil is very important, especially in any economy, because it's one of the biggest, broadest measures of inflation. Prices are high, there's a high likelihood that everything else is going to follow suit in terms of high prices. But if we do anticipate low oil prices, it means that you're going to anticipate low inflation currently at the moment. Now, looking at WTI, we have been seeing whereby it's currently trading at $62 a barrel. And this is going to be a very important factor, especially in the Fed's decision come tomorrow, whereby oil prices are low, meaning inflation in the United States is cooling down. And this could signify that the Fed Reserve could be prompted in lowering interest rates in the near future. Bitcoin is currently trading at $113,000 a coin, which is quite interesting also at the moment. That's going to be it for me. Remember, once again, the highlight of the day is going to be the minutes of the day, whereby we do anticipate what did the Federal Reserve talk about in the past meeting that they did have, but the highlight is going to be tomorrow's Jackson Hole Symposium. Right now, we'll want to switch gears to, if you have any inquiries on Instagram, I'll be glad to answer you. Is that FX calendar? No. So this economic calendar that I'm looking at, this is available on the HFM website, okay? You go to your HFM website and you come under tools and education. On the farthest right here, you do have exclusive analysis, then you do have the economic calendar. So this is the calendar that I'm using from HFM website. So I don't give out signals. Okay? Remember, I'm just breaking down the markets. I've told you the biggest thing as a trader is reacting to price action, and that is what I would want us to be doing. Can you touch on Euro USD? Yes, please. So Euro against dollar, whenever I'm doing analysis, I usually start from a higher time frame moving down to a lower time frame, okay? And before you go to the charts, you need to ask yourself, okay, let me just remove these drawings. Ask yourself, is there anything currently at the moment that is going to affect prices? Now, we have been seeing the euro gain against the United States dollar ever since January 2025. And this was partly due to the oncoming tariffs that Trump did enact when he did come into office. Now, when Trump did start announcing about the tariffs, people are skeptical about the United States dollar. And we did see a lot of money moving over to safer havens, okay? Now, on this particular case, the euro became a safer haven, whereby we did see the euro starting to gain against the United States dollar as a result of the tariffs. We have been making higher highs, higher lows, higher highs, higher lows, and currently we are in this very interesting region at the moment. Now, looking at it, where could the markets be headed to next? Remember, once again, President Lagarde is speaking currently at the moment, and we do have this region of interest that we want to focus on, whereby we did form a high around 30th of June this year. Now, the markets did retrace. We did form a high, but it failed to break the most recent high. Then the markets had a sharp downward trajectory, whereby the bears came into action for 3 consecutive days, whereby we did close now below the most recent low. Now, the markets are trading currently. If you look at it on the daily perspective, we have been consolidating for quite some time, particularly for almost 14 days straight. We have been consolidating on the euro against the United States dollar. So if you would want to look at an opportunity on the euro against the United States dollar, remember, once again, I don't give out signals. My goal here is to enable you find opportunities. Look at the data. What could be happening next in the financial markets? But this is the region of importance that you will want to be looking at. If the market does break to the upper side, then this means that Euro USD will be attracted to highs. Remember, prices moves from zones to zones. That could be the most easier target, the prices. If we do break above these highs at 1.17287, prices could continue moving to 1.17863. But on the other hand, if prices do break below this region, we might anticipate prices coming back down to regions of inefficiencies. We do have an order block around 1.14006. And remember, once again, as a trader, our goal is to react to prices. That's going to be it for me. Stay safe. Have a blessed day. And please join us for, we do have less than 2 days for the Mercedes-Benz C-Class. We do have a giveaway on the Mercedes-Benz C-Class. It's going to be held live on the 22nd, and one of you is going to walk away with a brand new Mercedes-Benz. Now we are going to give out also 10 iPhone 16s and 5 trading stations. Okay, so it's a laptop plus 2 screens, a keyboard, a mouse, sponsored internet for 1 year, Auto Chartist, which is the most recent AI that HFM have launched, that is going to look at information, it's going to look at sentiment data, it's going to look at fundamental data, and it's going to give you a weight of how strong or how weak a currency or asset is going to be. Stay safe, take care of yourselves once again. Thank you, Babu.